Hello, you're watching the Crypto Roundup on Proactive. Billy Farrington joining with all the latest crypto news. Billy, good to see you. Can you try and give us a handle on the roller coaster that's been Bitcoin this week?
A roller coaster, that is putting it lightly. And hello, Steve. Nice to see you. Yeah, it's been a really wild one this week, I have to say. Not only did we see one of the biggest intraday dips on the Bitcoin dollar pair in recent months, we also saw one of the biggest rallies as well. So going back to Monday, Bitcoin fell like 16% against the US dollar. It went down to a 6 month low of around $49,000, right? So yeah, a bit of a wipeout, to put it lightly. Come Thursday, we saw like a 12% rally on Bitcoin. It shot up against the US dollar really sharply, one of the strongest intraday trading periods in recent times. And it's just been absolutely nuts. I mean, anyone keeping an eye on the markets will realize it's not just Bitcoin that this has happened to. We saw the Nasdaq absolutely plummet on Monday. We saw the FTSE here in London nosedive. The Japanese Nikkei had an absolute disaster session, and it was just an absolute risk asset wipeout across the board on Monday. And people were like, obviously, really scared because is this another crash? Like, what's going on here? To people's pleasant surprise, that the rest of the week did see a pretty sharp recovery across all of these assets, including Bitcoin. And it's just been a super, super volatile one for reasons that we'll probably get into in a second. Yeah, Bitcoin joined part in this intense week of volatility. And despite all of this craziness, we're kind of back at where we were at the beginning of the week. So despite going to a 6 months low, we're still around. Actually, we're around 7.3% lower over the last 7 days. So obviously that's not amazing, but it could have been far, far worse. Let's just say that. Currently, we're looking at the Bitcoin dollar pair at about $60,500. So it's above 60K. I mean, yeah, I'm not sure if people would have expected that on Monday when we saw those prices. I mean, to put it into context, that's like $100 billion swing in market cap over 4 days alone. So pretty exciting stuff.
Oh, I'm guessing there were lots of liquidations due to this volatility, Billy.
Yeah, well, when markets plummeted on Monday, we saw like $280 million in long positions. That is, long open interest positions on Bitcoin. We saw about $280 million wiped off the market. So a bit of a bloodbath for the bulls. And obviously, we saw the inverse kind of happen the following days when we saw that sharp recovery. And to be honest, it's sort of evened out. So long and short positions have sort of equally been wiped out as it's typical what happens in weeks of heightened volatility. So yeah, like $280 million wiped off the longs and about the same on the shorts. So even Stevens, Stephen.
Billy, can you give us some more details on what these catalysts have been?
Yeah, sorry, it's been quite multifaceted, and I guess everybody's gonna kind of have their own thoughts as to why we saw the markets dip so sharply and why we're seeing this volatility. I mean, all I can do is tell you what the main narratives have been. To me, well, to start with, if you recall when we talked last week, it was tech earnings season recently, and it was a mixed bag of a tech earnings season. I thought it was all right, but obviously, I think the market was expecting these exponential growth in artificial intelligence led revenues, and that sort of just didn't really eventuate in this current reporting season, even though sort of most companies, apart from Amazon, hit their targets. I think the markets were a bit disappointed with these AI revenues, and that sent tech stocks lower. It didn't initially, but then when markets opened Monday, I guess all these built up orders kind of were processed. And yeah, we saw a big rout on tech stocks, which kind of filtered through to Bitcoin. Historically, is sometimes been correlated to tech stocks, sometimes not. So there was that factor into play. Then there are also those recession fears in the US. So there was some pretty worrying, not disastrous, but kind of, cautious unemployment data coming out of the US, and that kind of sparked recession fears. in the US, which obviously not always great for risk assets, not always great for the likes of Bitcoin. So there's that, and there are like more technical reasons as well. For instance, like the Japanese dollar carry trades, all technical boring stuff, but essentially the Bank of Japan raised interest rates last week for the first time in I can't remember how long, but many years. And that there have been these sort of arbitrage trades between the yen and dollar because of this wide disparity in interest rates. And now that those interest rates, that kind of disparity is tightened a little bit, that caused some carry trades to be unwound, which kind of just took some money out of the risk markets as well, for sort of technical reasons, probably a little bit above my head, but sort of that has been one of the other reasons for that kind of route. That all of this together has sort of just impacted the market, impacted the volatility as traders try and weigh up what this all means for their assets. And I guess the one thing that it has proved is that Bitcoin is not its own standalone asset class. It can very much trade in line with the broader market. And I guess even more so these days, now that the Bitcoin is an exchange traded product, obviously you can get these ETFs by BlackRock and all that. So I guess that, potentially has increased the level of alignment that Bitcoin has with the wider risk markets. And I guess that's been a bit of a takeaway this week.
Well, let's hope things that calmed down into the weekend and into next week. Billy, thank you very much as always for your insights.
Yep, no worries. Cheers.
That's Proactive's Billy Farrington.